Testing, testing. Can everyone hear me? Right. I got Dr. Rizar. Nice to see you. Thanks for tuning in nice and early. Right. Got Tuan as usual. Right. Nice to see you again. Nice to see you again. For those Yamilu, nice to see you, man. Right. And those of you guys who attended my pre-market analysis 12 hours ago, right? Thanks for tuning in again, right? A couple of our trades working out pretty nicely already. Ajay, nice to see you. Luca, nice to see you guys again. Finally seeing the familiar names. Yeah, finally seeing the familiar names. Yeah, I'm back at doing this live trading sessions, right? Pre-market analysis, right? So you're gonna see a lot more of me, including on IC Markets Instagram. Yeah, you're gonna see a lot more of me, right? So we're gonna have a lot of fun together. Looking for really good trading setups. All right, we got Mr. Low. Nice to see you too. All right. But yeah, let's let's begin today's session. Right, today's session is a live trading session. Right. Focuses a lot more on the trading setups. Right. So I'm just going to give you guys some context. Okay. Because I think some of you guys might not be aware of it. But if you go to IC Markets YouTube, right, and you actually go to the channel over here, right? Under live session, what you notice is that we have the pre-market analysis here now. The one with the a nice little designs over here. We got a pre-market analysis, right? It is on a Sunday, 9 p.m. GMT, right? So it's about 12 hours ago, right? If you're in London, it's about 9 p.m. Right? If you're in Europe, it's slightly after 9 p.m., about 10 p.m., 11 p.m. and stuff. Right, so pre-market analysis focuses on the fundamentals which are covered, right, and the technicals more on the 1 day time frame. So it's a slightly longer term horizon. All right. Hey Jack, nice to see you again, man. Right. But yeah, so that focus on a longer term horizon on the live trading session, like today, right? We're gonna focus more on the 4-hour chart, the 1-hour chart, my own kind of scalping kind of setups. Pretty fun stuff, pretty good stuff, right? But yeah, it's different approach to trading. But you first need to have a good idea on where the market is heading for the higher time frame. Then you take the trades from there. Okay. All right. So Jack, oh yeah, it's all nice to see you, right? Let's see. I just need to check one thing because it's I'm streaming via OBS here. Is the audio clear? Right, is the audio and video clear for you guys? Audio is perfect. Okay, that's good. Right, Tom. Good morning. Good morning to you. Right, so I'm guessing you're probably in London, right? If it's morning there, I mean probably in Europe and stuff, right? If or UK. I guess. But yeah, let's begin today's session. All right, let's begin today's session. Right, it's pretty fun. It's a lot more trading related. These sessions on Monday. All right, disclaimer as usual, guys. Remember, everything in this webinar is educational in nature. All right, nothing should be construed as investment or trading advice. So please do your own little due diligence before you guys trade. Okay, we're gonna look through a lot of trading setups today. Right, so yeah, pay attention. Right, it's gonna a lot of them are actionable, right? Especially with a lot of market movement recently, a lot of things you can look at. If you have some trading setups or approaches which you want to clarify with me, let me know too. I'll see how I can answer them. Okay. Of course, introducing your host for today. For those of you who are here for the first time, right? My name is Desmond Leong. I'm an external analyst here at IC Markets. I run the award-winning research firm Everest Fortune Group and also the Forex Army. So we're finalists for 2019, 2020, 2021 for Best FX and Best Equity Research. Work with many of the major financial institutions on helping them forecast where the markets are heading. But we have a special partnership with IC Markets where I bring you guys the good stuff, the juicy stuff, the stuff that really take your trading to the next level. Okay? Now, let's begin today's session. All right, let's begin today's session. I'll be sharing you a couple of moves. This pound dollar is my biggest freaking regret. Right, regret because I took the trade, but I kind of closed out early. Now let me show you. Right, those of you who are familiar. Oh, okay. For those, let me just point you to the video. Let me just point you to the video that you need to refer to if you want to learn some of my trading strategies that I personally use. All right. It's IC Markets webinars. All right. It is called the reversal strategy. This link in particular, if you want to learn a little bit more about my trading setups, you can check that out, right? And of course, you need to know a lot about Fibonacci, which I noticed that, it's, there you go. You need to know about this 4 over here, right? You need the retracements, you need the, you need the retracements, you need the extensions.
Okay, so guys, I prepared this. Bang, sound works.
And especially the retracements and extensions. Okay. But yeah, expansions and projections less, but extensions definitely required, right? So I'll show you a little bit about how I get into my setups. Okay. Wow, look at that, so freaking nice. Okay. Now pound dollar 1 hour chart. Okay. Let me share with you the setup that I took, right? Why do I say setup that I took? I'll share with you guys really clearly over here. Right, so I did take this setup on pound dollar, right? My only regret is I closed it off rather early, right? You can see I took it over here. My stop loss is right above up here, right? My original take profit, I'm not sure if you can see it, right? But my original take profit is the blue line over here, right? So this was my original take profit, just that I chickened out, right? Yeah, I've freaking chickened out and I closed it off early, okay? I closed it off over here. If I closed it off early, I would have made a good 4.5%. If not, I just kind of made only about 3.5% on this trade. Right, it's one of those little tests that you take. Right, so yeah, it's a nice little trade that I took. Right, now the reason why I took this trade, right, you will notice that you always play it down to a 23%. Right, in fact, for those of you guys who are familiar with my approach, I usually play it down to the 20%, not the 23%, because price tends to, as you can see over here, what do I always say about take profit placement, right? Sure, ideally we play the move down to a 23%, but there's a support level over here, right? There's a support level over here, and what happens is that price tends to react, bounce before these key support levels. Right, so if ideally, if you put your TP right at the 23%, that's where you might have missed out a bit. Okay, but yeah, enough about that. Right, so managed to catch the reversal really nicely. Played the majority of the trade back about 3.5%. Right, and how did I do that? Right, how did I do that? Let me share with you guys over here. Now, my trading strategy. Right, I'm not going to talk about the D1 charts because that was left for the pre-market analysis. I'll be focusing more on the shorter term time frame, H1 and H4. Okay, so H1 charts, right? H1 charts, when looking at this movement here, what you want to look out for is you want to look out for nice little Nike ticks. Okay, nice little Nike ticks. Now, why do I risk 1.5% on this trade versus the normal 0.5 to 1% that I risk? Is because of this movement. All right, longer term time frame, you have a nice little 1 to 7%. You can see 1 to 7% Fibonacci extension lining up really nicely there. And on top of that, what you notice is that there is all this resistance up here. You got one resistance here, you got two resistance here, right? So it is true that it's a nice little swing high resistance level that you're looking at. And on top of that, on the shorter term time frame over here, all the way up to here, you got another 127. I know you can't really see it, but I got another 127% Fibonacci extension up there. So when you add it up, you got one reason why it's going to reverse, you got two reasons, you got three reasons, you got four reasons. So you got a really nice setup over there. And when you have such a nice setup, you don't need to place your stop loss too far away. You saw what I did. My stop loss was about over here. I kept it really tight. It was initially over here, right? Just give it a little bit of breathing space, but the tighter you can keep your stop loss, the better your risk to reward can be. Okay, So if you can catch this, what do I mean by that? Okay, for because I realized I haven't shared this concept with you guys in a while. All right, so let's just say your entry, right? I'm gonna remove this here. Your entry is right at this level. Okay, the 1 to 7%, like I always tell you guys, that I always like to enter a trade. I wish I've held it all the way. I held it all the way. I made a good 4.5%, right? But when I take this trade here, now let me show you what I mean by a short position. Tariq, nice to see you. Tariq, nice to see you, man. Thanks for tuning in. Okay, so this is your stop loss, and this is your take profit, right? Take profit, I'm going to put it at about over here, which was my take profit. Now, what I want to show you guys is that's too big. Is this thing over here? You want to focus on this value, risk to reward 2.16. Okay, risk to reward 2.16. What I mean by that? Okay, so usually when you take a trade, right, you place your stop loss and place your take profit, right, and you end up getting a risk to reward of like 1.37, right, or maybe like 1:1. Okay, now a lot of people, so in this case, right, I'm risking 63 pips, I'm targeting 63 pips. That's a risk to reward of 1:1. Okay, a lot of people just focus on the take profit. Right, you take a trade, you put your take you get your entry, you put your take profit, and then your stop loss is like a little bit of an afterthought, right? You just put your stop loss at a distance away based on the risk to reward. But the problem with that is that when you trade that kind of approach, right, you are kind of handicapping your trade, right? You need to ask yourself, why do I need such a big stop loss? Or whatever the stop loss that I put, why am I putting my stop loss there? And the reason for this is because your stop loss is as important as your entry and is as important as your take profit. Okay, so in this example, right, so my stop loss, I would probably have put it, you notice that the tighter I put my stop loss, can you see, focus on this number, the risk reward, right? The tighter I put it, you can see almost exponentially, kind of increases. Now it's like 4, 5, you know, so you can see it's increasing exponentially. So the market rewards you for being accurate. Okay, so in this kind of situation, if I really had taken my take profit, right, I was able to snipe with such accuracy, maybe I put my stop loss just about over here, I'll get a pretty good risk reward of 6.35. Okay, now if you want comfort, right, you put your stop loss further away, you notice that it actually sacrifices your take profit, right? It sacrifices your profit potential. Price might reach your take profit, but you end up, instead of making like 6 times or 7 times your return, you end up making 2.2 times your return. Okay, so always remember, it's not only about the take profit target that you're going for, but you want to try to target how close. The tighter you can keep your stop loss, the better your risk to reward is going to be. Okay, and then of course the better your the trade returns will be for that trade. So my original stop loss was about, if I'm not wrong, it's about 55. So my original risk reward was 3.59. Okay, it would have been great, but I was thinking, right, the moment I got into I put the pending order, I was already wondering how much lower can I tighten my stop loss. Now, so this is the part of trade management, I guess. I guess I kind of want to teach you guys, right? Don't just jump into don't just put a random stop loss, right? You need to see all the reasons why you're placing a stop loss where it is. In this case, right, I noticed that the upper bound of the resistance is over here. Can you see? It's right about over here, right? So from my entry to my resistance, I have this whole area highlighted over here. Okay, so I wouldn't put my stop loss anywhere within this area. I kind of want to put my stop loss, slightly above, give it a little bit of breathing space, right? Which is like just about over here. Okay, so if you think about it, right, if your strategy, right, if your idea of a trade is that it's going to reach this level and it's going to reverse, okay, let that sink in, right? Your idea of a trade is that it reaches this level and it reverses. Why would it reverse? I'm sorry. Tom, yes, you're right. Okay, so I will share a little bit more about like stop loss placement in a bit, right? Hey, Joanna from Kwa, nice to see you again. Yeah, my family is good, right? Um, uh, yeah, it's nice to see you guys again. My family is good, right? Anyone wants? Oh, sorry. Anyone wants to see a picture of my kid? There you go. There's a picture of my kid. Isn't he cute? So sorry. I'm so shameless, but yeah, he's a cute boy. That's really nice to see you. Right, that's really nice to see you too. Okay. But yeah, it's life is a little bit different, I guess, being a father. Right, life is a little bit different. Yeah, your priorities change a bit. Right. Thank you, John. Nice to see you. Yes, that's growing really well. Right. Soon you'll be playing with your the blocks that you gave him. Right. We use the Fubbles gun. I think it gave us very often. He loves to play bubbles. All right. Okay. Yeah, I can see a couple of questions come in. Very good questions by Brian, Joanna, Tom. Okay. Now, so you can see over here, this trade, right? This trade that I took, right? For those of you guys who are late, I will share with you. I'll share with you the kind of setup that we took. I think it's over here. Right, you can see the reversal. Right, we caught the reversal right about here. Our stop loss was super freaking tight. Right, it was just about there. Right, and we played the move down. I would have played it to the full take profit. I would have made a good 4.5% instead of 3.5%. Right, there's a big bullish candle here. You are not wrong, Brian. There's a big bullish candle. Right, and was I afraid of that? Right, actually I wasn't really that afraid of it. Right, and I will share with you why. Okay. Now, when it comes to take profit and stop loss placement, okay, let's just focus a little bit over here. So let's talk about your trading strategy, right? Your trading strategy and your I guess what I'll focus on is your margin for error. Okay, your trading strategy and your margin for error. Okay, some trading strategies, right? Some trading strategies, maybe we have we have a moving average crossover. Right. Let me just load another chart. So imagine you have a moving average crossover. The margin for error for this is like really, really high. Right? It's really, really high. Powerful Dragon, nice to see you here. So you can see if I took a trade when the death cross happened over here, right? You can see. Okay, let's just zoom in here. If I took a trade, if I sold, right? Over here, the moment the death cross happened, you notice that your margin for error needs to be pretty high because it kind of went up first before it started to go down. Even then, it goes up and goes down. So from your entry over here, you need a pretty big margin for error. You will notice that it happens quite often, right? Of course, not over here. So even in this case, right, we take it over here, and it would have been at the worst time the markets would have reversed. Afasuku, nice to see you too, man. Right, so this is what I call margin for error. It's a very, very big margin for error. Different trades, different margins for error. Okay, now let me just remove this. When we go to pound dollar, right, go to pound dollar, and I go back to the H1 chart. My specific strategy, which you guys might have been familiar with, is I usually take the trade when price reaches. So I draw a nice little Nike tick over here. And I'm just looking for the 127%. Okay, when price reverses off this 127%, it usually reverses very nicely. You get to back a nice healthy profit. Okay, now my strategy, when I am imagine you're writing down your strategy and you're explaining it, right? A lot of people think about the entry. The next thing that you need to think about is the margin for error. Okay, margin for error. How much breathing space must you give it? How much breathing space must you give it, right? Historically, when you backtest it, how good has it performed, right? So in this example, right, my trade over here, right, I was when I took the 127%, I know that my specific strategy is it will either reverse from the 127%, and if it doesn't reverse from the 127%, it might come all the way up to 138% to stop me out. Okay? Now, historically, I noticed that usually if it reverses, sometimes the wick goes all the way up to the middle point, then it comes down. Okay, so that is what I noticed in my testing, in my trading, right? So I would then put my stop loss. I then put my stop loss not over here. I'm going to change this to a rate stop loss level. But my stop loss, I put it slightly higher to give it that little bit of breathing space. Okay, because to me, right, if price were to rise all the way up to here, right, and touch the 138%, or maybe all the way up to here, right below my stop loss, right, this is a different trade. It's not the trade which I initially wanted to take. My case, my primary scenario, right, my A setup, my plan A. Sorry, goodness, I was just thinking of all the different words, right? But yeah, my plan A, right, as you can see over here, my plan A was to just play this reversal. If I'm right, I want it to be super right. But if I'm wrong, I don't mind taking the loss. No, it's not really a triple top. Powerful dragon. What time frame are you looking at actually? What time frame are you looking at for a triple top? But to me, it's not a triple top. Okay. Yeah, but if I'm right, I want to be right all the way. If I'm wrong, I don't want to pay for my mistakes. What do I mean by pay for my mistakes? Okay, I'm just going to delete everything over here. So a common thing that people do, in trading, which I always notice is a mistake, is that when they take a trade, they give it too much breathing space. Like I showed you in this trade, right? Like I showed you in this trade, you take a short position, right? You don't want to give it too much breathing space. You need to ask yourself, at what point does it not make sense to have such a wide stop loss? Okay, a stop loss over here, it actually tells me that, all right, Desmond, in my trading strategy, if I'm explaining to myself, right, Desmond, price usually retraces off the 127% for you. At this point of time, right, you have one major swing high resistance, you got two major swing high resistance, all lining up over there, as you can see. Hey, shit. Yeah, you got one major swing high, two major swing high, 127 expansion, and a smaller 127% extension all over there. You have all these reasons why it would not reverse. Okay, you want to reward yourself for being confident and being correct, right? So we are confident price might reverse, and the maximum breathing space I give it is over here, in case price starts to touch this level and wick around a bit, right? If I move it any further, it goes from proper trade management to being a chicken, right? Right? You know, it means I'm being a little bit of a, lack of a better term, but I'm being a little bit of a coward, right? Because I want more breathing space, right? I'm just saying I am uncomfortable with the kind of trade that I'm calling, how intense it's going to be, and I just, if I put my stop loss very far away, I can feel very comfortable, right? I'll be like, yeah, my stop loss is so far away, right? And when price, especially with this crazy bullish candle, when it comes up there, right, I will feel very comfortable. I'll sit down and be like, yeah, it has triggered my entry, but my stop loss is so far away, right? And remember, there's a price for everything you pay. There's always a price for everything. Yeah, John, I'll answer you in a second. So there's always a price for everything. In this case, there's a price for comfort. There's a price that you need to pay for comfort. Okay, in this sense, right? What's the word for it? The price is your risk to reward, right? So even if price touches this level, right? Even if price touches this level and reverses and drops your take profit, you're gonna make 0.72%. That is the price you're paying for your comfort. Okay. On the flip side, if you were willing to just trade without emotion, right? And of course, exercise a less push yourself out of the comfort zone, because honestly, the approach that I'm telling you, right, it goes against human nature to want to put yourself in a uncomfortable situation, right? In my case, you want such a tight stop loss, right? And if you think about it, this big bullish candle, right? So Brian was asking a good question. This big bullish candle, did it put you off? And to me, no, it didn't put me off. And the reason it didn't put me off is because I know that my part of the strategy does not factor in the bullish candle. Okay, important point here. My part of the strategy does not factor in how big the previous candle is before your trade is triggered, there are cases. There are cases where you need to factor that in, right? There are certain trading strategies where I say if your previous candle is a massive engulfing candle, you probably want to exercise a little bit of caution. But my strategy does not factor that in because to me, right, a big bullish candle, especially for reversal trading strategies, a big bullish candle means that there's a lot of buying that was happening, right, and it's more likely that even on the shorter term time frame, right, you're going to see a lot of overbought situations, right? Most of your stochastic RSI will be pushed to the brim, right? So that's what happens when there's a very big bullish candle. It means that on the shorter term time frames, a lot of things have begun to be overbought. Okay. Anyway, let me focus a little bit more on here, right? So Joanna's asking, so would my stop loss placement, right? Enoch, nice to see you. My stop loss placement is always between 127, 138. I have been fine tuning it a bit, right? Previously, my stop loss, I can see over here, my stop loss was more towards 141%, right? I then noticed that if I put it at 141%, and I play the move down to the 20%, my risk reward is 1.73, which is not that amazing, right? I think it's good. But with the kind of reversals that we're calling, as you can see this reversal over here, right? The term I want to use over here is that you want to be rewarded for this kind of accuracy. I noticed that one good trade, like for example, one trade that I just took that made 3.5%, it means that for the next 3.5 trades that I take, I could just lose them and I would just go back to break even, right? Because I was willing to take the risk. A lot of people think that winning is like a 50-50 kind of thing, but you have to know that if you break out of the mindset, right, winning can be a 70-30 kind of thing. And at the same time, not only do you have a 70-30 kind of hit rate, but you have a good risk to reward, you're on your way to having a very profitable trading strategy. But you need to first confront your discomfort of having a stop loss that puts you that is really tight. Okay, now why do I say tight? It's because it should be as tight as it needs to be. I know that doesn't sound exactly very that sounds very Confucius, right? That sounds something like Master Yoda, I would say, right? Your stop loss needs to be only as tight as it needs to be, right? Then Anakin will be asked like, how would I ever know how tight it needs to be, right? And the thing is, in my example which I'm sharing with you, is that I know my strategy, right, it has two scenarios. One is this, the other, right? And I'm going to show you in this really painful example. The other is this dollar cat setup. Okay, the other is this dollar cat. Was it this? Nope. Yeah, the other was this dollar cat setup. You can see over here, I took a trade. I expected it to bounce. It just dropped and it stopped me out right away. So I'm not just showing you one side of my trades. I mean, I take some trades. Most of them seem to hit profit pretty well. Let's review some of the trades together, right? So in this example, you take a trade, you're wrong right away, okay? And if I'm wrong, I want to be wrong. I mean, this one I was a little bit risky. I went to the M15 charts, right? So I believe on dollar cat over here, this was very painful, right? I got stopped out right away. Dollar cat, I took the trade. I expected it to bounce off the 127. It did not bounce off the 127. I was looking at this trade over here. It went up. I expected it to go down, touch this level and go up. But what I noticed is that if I'm wrong, I'm wrong, right? This big bearish candle could just have been the big bullish candle, right, Brian? And it would have stopped me out. But if I'm wrong, I know I'm wrong. But if I'm right, I know that I tend to be right very, very well. Let me show you some examples. Okay, let me just show you some examples over here. I think it was probably, what is this, Kiwi Yen? We need to not do auto scroll, and we do Kiwi Yen setup over here. Probably on the M15. Let's do on the M1. All right, let's do on M1 over here. Oh man, where is this trade? I don't even see the trade. Or maybe I'll do M5 because it's been too far away. Okay, there we go. Right, take this trade. You can see nice little bounce, right? Price dropping very nicely. This was the zigzag, dropped very nicely. Touch, went down a bit. Yeah, give it a little bit of breathing space, then it bounced. Okay, So this trade setup also, I think, was another one on dollar yen, right? M5 or so. Where is the setup? So I need to stop auto scroll. It's a little bit hard to see, but yeah, same thing. Play the bounce, right? This is kind of my scalping strategy. You notice most of the hit rates are pretty good. You know, hit, lose, right? You got a hit, you got a hit, you got a hit, you got a lose, you got a hit, right? So you can sort it. You can see like the most of the hits are pretty good, right? More hits and losses for sure, right? More hits and losses, right? Just let me show you over here. If I'm wrong, I know I'm wrong straight away, right? Price was supposed to bounce, it didn't bounce. I got stopped out. So I know if you need to major in your major, right? You need to if your strategy has the forte of your strategy is that you're able to catch bounces very well, you need to be able to stick to that. Okay, not all strategies do the same thing, right? We can review it. I think trading strategy clinics and stuff. You want to run some ideas, some of your strategies by me, you can let me know, right? But you need to know how much breathing space you can give your trade, and once you know how much breathing space you can give your trade, give it that much, right? Don't be tempted to give it more, right? You give it more, you're just paying for that comfort, right? And of course, it comes at a price. It comes at a price of your risk reward. Okay, I can see Christia traders asking, what do you think of smart money? I think smart money, there's nothing wrong with smart money. I think it borrows a lot of his theories from Wyckoff, right? It can work. I think there's a lot of like those Wyckoff schematics, M1 time frame and stuff. It's a little bit intense, might not be for everyone. There is the concept of market imbalance, which is really just talking about like overlap support and resistance levels, which I teach about. Different terminologies on how they call it, right? I don't think it's that different, right? It borrows a lot from the universal laws of support and resistance, area and zones. Just that I think they have a lot of reference to schematics, which I'm not too big a fan on, right? I think it stifles you a bit because I'm an Elliott wave technician, right? I came from a company that did Elliott wave for the largest hedge funds. We did it for Goldman Sachs, even the banks, right? We did it for Citibank, right? JP Morgan. We did Elliott wave for all of that, right? And the thing about Elliott wave is that it has its kind of schematics too, what you expect the wave to kind of turn out to be, and it was very paralyzing. It's good for analysis but might not be good for trading, right? A good analyst does not make a good trader. Remember, a good analyst does not make a good trader, but it does require you to know the good analysis in order to be a good trader. Okay. Now, okay, I am going to try to scan through a couple of charts. DXY by Tariq, right? Okay, I have. Let's look at what Joanna just mentioned, right? 1. You mean the 161, the 161.8, right? So I think what you're referring to, Joanna, what you're referring to is whether I would take the trade if price reaches the 161.8 over here. Is that right? Did I get it right? Now, why would you buy? Do you mean sell? I wouldn't really buy at a 161.8 because it is kind of at a reversal level, right? I mean, I don't want to look at all these other technical analysis, but technically, right, what this Fibonacci extension does very well is it does very well in forecasting reversals. Okay, it does very well in forecasting reversals. So it can forecast reversal here. The next reversal likes to forecast is here. The next one it likes to forecast is over here. So this is what I call a contrarian strategy, right? So there are two kinds of strategies. There are the breakout strategies where you see a level and it breaks out, and there are the contrarian strategies, which are the reversal strategies where it touches the level and it reverses. Okay, Fibonacci extensions are contrarian strategies, meaning that you look for reversals. So at this point here, 161.8, price is supposedly at its strongest reversal level, right? So it'll be quite weird for you to buy expecting prices to rise at this level, okay? Instead, what you can do is, for example, if price actually did a retracement here, you buy on the weakness, as you can see over here, and you look to play the bounce up. Oh, was she? Was it? Oh, was it Dollar Cat? Oh, was it Dollar Cat? Oh, Luca. All right, I get it. I think that's what happens when there's a lag in the messages. Okay, so what you're referring to is the 161.8 over here. It will miss it just by that little bit, but yes, you can take a trade too, right? So there are two places where I usually look for a trade: 127 and 161. The important thing is that your Nike tick needs to be as accurate as possible, right? It needs to follow the real thing. The reason why sometimes I don't trade the 127 is because no, the 161.8 is because by the time price reaches the 161.8, it might make a bounce, and then it comes down. So this movement is not very nice. A very clear movement like this, then it is nicer. Okay, we can see how often this thing actually works out, right? Even on the smaller time frame, right? You look at this, right? I take a trade here down to here. Did I get it right? So you can see Nike take, same thing, come all the way down, come all the way up, all the way down, all the way up. It reverses from this level over here before hitting the 138, comes back down to test the 100% again, right? You will see it happen pretty often, right? Peter is asking for a FIB extension setups. All right. Interesting. There's a little bit of lag. The stream health actually says is pretty good here, so I'll need to check out what's up on that. Right, I need to see what's up on that. But yeah, okay. So just let me see some of the questions coming through. Peter is asking what are my FIB setups. My FIB setups are very simple, right? You just use a Fibonacci retracement, right? And the key levels that you need to add is this level: 127, 138, 161.8. You can add the 141, 145, but I use it a lot less now. And those of you guys who know I use Fibonacci expansion, -27, -61.8. But remember, it's not easy to use it. You must use it correctly. Okay. All right. All right. Let's go back to analyzing the charts. All right. Let's go back to analyzing the charts. In this case, right, Joanna, right, I think there'll be less. We might have just missed out on the trade a bit, just that little bit. 161.8. If I offset it a bit, I might have been able to get in. Just remember that you should be looking at a very nice zigzag, clear movement down in order to take that trade. Okay, I actually do think that it might have been. No, probably not. Probably not. Okay, let's look at a couple of charts. I know there was a request for DXY. Tariq, what time frame are you looking at for DXY though? Oh, 23.6. So I assume if 23.6 you're looking at a 1 hour chart. Yeah. DXY. What do I expect on DXY today, man? Our longer term time frame, remember for DXY we're still expecting a drop. Alright, we're still expecting prices to reverse below this area. Very, very nice overlap resistance. We are expecting prices to kind of just drop a little bit from here. Right. Powerful Dragon, XAUUSD. I can't advise you on take profit and stop loss placement, man. Right. There's going to be investment or trading advice. Right. So, nope, I can't advise you on that. If you're asking me about take profit and stop loss placements. But I can take a look at gold for you. Tariq, DXY is closing on upper 23.6. I guess you mean 23.6 here. Yep. It could be. You could actually consider a potential reversal kind of trade. Although I don't use these kind of setups that much, but what I do notice is that definitely area of interest. Right now, price is back up to there. it could reverse down as a nice area of resistance. Okay, the only problem is there's a big gap which I think price is trying to fill. Okay, all right, but yeah, for DXY, 23% retracement, pullback resistance, a decent enough chance that you could see price kind of reverse below the 104.18 level. Okay, for gold, right, next time, I guess you guys need to let me know what is your time frame, right? What is your time frame? Because I will know 1875, 1895. It is more, I'm guessing on the H1 time frame. I can't really tell. H4 time frame, H1 time frame. Right, so it's a little bit tricky. You need to know what time frame you're looking at, so I can give you an idea accordingly. Right. I think on gold we're actually bearish. We're bearish on gold. We're bearish on gold across this level over here. I think all the way up to here. I'm not too sure, but yeah, I think we're bearish on gold throughout. Oh, but this is the D1 time frame. I don't want to dive too much into the D1 time frame. Let me start looking for some setups for you guys, okay? Euro dollar, we don't really have it. It reversed right below the 127, as you can see over here. Right below, it reversed, so it was a little bit wasted. All right. But it is crossed, so no worries about that. Pound dollar, if you're in, you have made a good amount of profit. Oh man, I should have held it all the way. Dollar franc. I guess dollar franc, if you're on the H4 time frame, this is definitely a support level that you can look at. Yeah, this is definitely a support level that price is testing, right? And you potentially could see a bounce from. Okay, definitely a nice little support level. Next big support level probably will be down here. Yep, that's right. Okay, now let's go. Guys, if you have any requests for me to look at any charts, let me know, alright? Otherwise, you won't have any time to entertain any charts later. Dollar yen. Not much. Ah, man, you're requesting dollar yen. Ay. Okay. Okay, we got dollar yen, we got pound yen, we got Aussie dollar. Okay, the requests are coming in. Thank you guys. Got dollar yen, dollar yen. Okay, euro pound too. I got it, guys. I got it. Just let me pour a little bit more drink. Shucks. Give me a second, alright? I usually take a while to do my analysis. Testing a 50% retracement with a major swing overlap support now. Damn. I like the little bit change in momentum for it to turn bearish. I like this level down there too. I would say sorry, just give me a while. I just need to think very carefully about dollar yen. The market movement is just not that great. Support and resistance level. I'll wait for this support level to be broken. Right, this support level needs to be broken. Right, 50% retracement, pullback, kind of, and then overlap kind of support over here. Right, so if this level is broken, right, we should see a nice bit of acceleration down to the 61.8 retracement over here. Okay, that is kind of my view. In terms of levels you can sell from, right, probably look for reversals of this level. If you want to get in a good price, reversals of this level will be pretty decent, I guess. Right, okay, we got a request of pound yen. H1 nothing, so let's look at H4. Okay, let's look at H4. What I like about pound yen, okay, really clear break of structure over here. Super duper nice. So I'm actually bearish on it now. So I'll be a little bit bearish on this. Now the reason is because this has been the area that price respected many times in the past, right? You can see many times it has respected this level, and price has finally broke that level, right? And closing pretty strongly above it too, right? Ichimoku cloud, nothing much over here, but this to me, right, is a signal. This to me is a signal that we could see a big drop from here, pretty far down. Now, how low can it drop is the next key question, all right? A bit tricky. A bit tricky. I want to say this overlap, but there's a very nice retracement, 61.8 retracement over here. So it could very well kind of bounce around here. Yeah. It could very well kind of drop to this like support level. Yeah, for pound yen, I'll be looking at the sell on strength for the move down to this level over here, 160.31 to 159.81. Okay, definitely one of the key things to look out for. And what I like about this is that there's a potential head and shoulders kind of pattern over here. So if the pattern does play itself out, it can drop a lot further. Okay, we got request for Aussie dollar, right? Aussie dollar from Joanna from Kwa. Aussie dollar, shit, right? I did a 1 day analysis on it. Yes, I remember I did a 1 day analysis on it and I couldn't find any level. Now, so the thing about Aussie dollar, right? The thing about Aussie dollar is that you need to look at Kiwi dollar, right? Kiwi dollar, very, very bearish. Not only is it very bearish on the daily time frame, right? There's a nice double top kind of pattern, which kind of suggests that we should be able to see a nice little drop over here. Why we compare Kiwi dollar when we're analyzing Aussie dollar is because of correlation. So you can click this button here, Aussie dollar, and you can put it on the same price scale, and you notice that it moves in tandem very much closely with Kiwi dollar. One goes up, the other goes up, the other one goes down, the other goes down. So with this power of correlation, then we can get a gauge whether Aussie dollar is in trouble or not, right? So we from what we're seeing over here, right, we are bearish on Kiwi dollar going down, which means that Aussie dollar over here, right, we, as much as we want to kind of just play the bounce all the way up, it might suggest that things might start reversing, right? Because of what we're expecting on Kiwi dollar, we're expecting a strong reversal on Kiwi dollar, which means that Aussie dollar, it needs to drop somehow. Okay, so that's how you use correlation to kind of just improve your trading strategy, help you fine tune a lot better. Okay, now request for Euro Pound. Overlap support, very nice. Not much of an overlap resistance. Overall trend rather has still been on the up. I doubt this connects the lines, right? But yeah, overall trend has still been bullish, right? Overall trend has still been bullish. Nice little Support over there. The next closest resistance I can sadly see is up here. However, euro pound, right? Euro pound, if it does the reverse Nike tick, euro pound, if it does the reverse Nike tick, right, it can actually drop quite nicely, right? Ahmad, please extend your Chrome browser extension. Which Chrome browser extension are you talking about? Right? Yeah. So for euro pound, I'm looking for this reverse Nike tick that comes all the way down to 127, buy and play the bounce up, right? So this would be my setup for euro pound if you guys are looking at it. Otherwise, on the H4 chart, on the slightly longer term time frame, right, we are seeing support. There's a decent chance that it might bounce up from here. Okay, I gotta follow based on request schedule. Nasdaq 100. Nasdaq. I mean, there's still a nice little bearish kind of trend on Nasdaq pushing prices down, right? So we could potentially see this. I always like to believe that the trend is your friend, right? It's very, very cliche, right? But it's true that it's true that the trend is your friend, right? When you play in the direction of the trend, right, things are slightly better, right? So in this case, we are seeing price potentially break this. So I'm waiting for a break of this to play the move down. How low would I go? I will kind of just play just down to the support level. I won't play beyond the shadow, but I'll just play right at the close of all your fingers, right? No, I mean I'll play to the close right over here, right? For a drop all the way down. This would be for Nasdaq. All right. Potential stop loss placement probably somewhere over here, right? But oh man, I can't seem to draw it, right? Yeah, potentially somewhere over here. Okay. Sorry, just powering through the analysis. Bitcoin has one of the nicest setups of the day. For me, I've been calling for a drop on Bitcoin already, and I expect it to kind of work out. Okay, Bitcoin. Let's go over here. Very nice overlap resistance, as I can show you, right? I'm going to draw it over here. You will notice that price reacts, bounce, reacts a bit, bounce, reacts. Okay, that's why I like this overlaps resistance. It's very nice. And that is also why this will form the basis of my sell entry. From a technical perspective, there's no denying it that price has been on a downtrend. So we got the trend in our favor. You know, we expect it to be slightly bearish, right? And then of course the Ichimoku cloud, right? Nothing to do with the Ichimoku cloud because they're a little bit too young, right? So let me see. Overlap kind of resistance over here. Sell entry. How low we go? You know, if you are feeling conservative, you can play it down to over here, right? This is the take profit. If you're a little bit more adventurous, you can play it down to over here, which is a super nice overlap. Okay, super nice overlap. You can see a bounce over here, reaction over here. Right, so we could expect prices to drop all the way down. Okay, so yeah, my view on Bitcoin, right, Jamilu, is that, you know, we could see it drop all the way down to here. Okay, now Euro Kiwi. I don't know if I even have Euro Kiwi over here. I'll just take a quick glance if anything is worth looking at. A little bit hard, right? Nope. I have nothing for Euro Kiwi. The chart is a little bit messy, right? The chart is really messy. So it's a bit hard to forecast it. But it could be reversing from this level, although it's still on the uptrend. But short term, it might reverse from this channel resistance. Okay, but yeah, nothing much on Euro Kiwi. US 30. I think it's the Dow Jones, right? Dow Jones, I think I highlighted that this would be the support level, right? This will be the support level down here. Dow Jones, take note that it could have just formed a nice little double top kind of pattern. So we could see prices going down a lot further. Okay, that's a key thing. I take note of double top, no, of Dow Jones, right? Nice little double top, nice little 38% retracement broken. So we should be in a little bit of free fall mode all the way to at least 50%. Okay, I know, I mean all the way to maybe 61.8. Oh, there it is. Yeah, so we could actually see it drop all the way down to here. Okay, 31,057. Okay, now let me see. Last one, maybe pound Aussie. All right, we got pound Aussie over here. Let's see if there's anything nice. I thought I did look at gold already. I did look at gold already, right? Or maybe I did not. Yep, so this is what I'm going to play for dollar yen. Slightly riskier. Yeah, but I think we could play the move on dollar yen all the way down to here. Yeah, we could play a move down to here for dollar yen. I mean for gold, okay? Now let's look at last one, pound Aussie. Oh, pound Aussie, the key support level that you need to take note of over here. Very nice support level, right? I call it a nice overlap level, so please take note of it. So we could play a drop. Yeah. For pound Aussie, I'll probably play a drop from here. I'll probably play a drop, yeah. Yeah, pound Aussie is slightly trickier, but I'll be looking at the drop for pound Aussie around here. Okay. I think I need to rush also. Nasdaq, if price closes below here, I will play the move down. Okay, I'll probably play the move down to wow, yeah, if it really breaks this, I can play the move down to 61.8 minimally. Okay, so my take on Nasdaq, yeah, is if it breaks this level, we can play the move down. First to this level, if you're more adventurous, you can go all the way down to here. Okay, guys, thank you for tuning in. Thank you for tuning in for today's session. I can't believe it's a whole 1 hour already. If you're here, please do me a favor, help me smash the like button, right? It really helps our YouTube algorithm, right? Rank well, right? Joanna, most of them will be with me, right? The live market analysis, the pre-market analysis happening on Sunday night will also be with me, at least until the end of March. I'm going to take a 1 week, no, 3 days kind of break, right? Have some time with my kid, right? No problem. I'm glad you guys found it useful, right? I'm glad you guys found it useful, right? Let me see, where do I is this a video? Right. Yeah, I have it over here. Come, this is my kid flying. My kid flying. Right, yeah, no, that's just a sneak preview of my kid, right? Follow me on Instagram, you're gonna see more of my kid. But yeah, it's just nothing much, right? It's growing very well. I saw a couple of you guys keep reacting to the Insta stories. Alright, good stuff, man. Good stuff. I need to rush back with my kid, right? But yeah, it's been great having you guys here. Thanks for tuning in. Thanks for staying throughout. Right, I hope you found it useful. You can catch me. Tomorrow will be a live trading. Will be an educational session, likely done by Cassandra, right? Every Sunday night and Monday, this time, is likely to be me doing the analysis. right? And hopefully it join me more often. We can look for a lot of nice trading setups, right? And yeah, make some good money together. Okay, all right. Nice to see you too, Joanna. Nice to see you too, Peter. Yes, Peter, it's possible to trade for a living, but with enough capital. Okay, with enough capital, because if like I said, you have $1,000 in your account, you need to, and you want to, you need $3,000 a month to live. It means that you need to make 300% a month. But if you have $30,000 and you need $3,000 a month to live, that is only making 10% a month, which is realistic, right? So yeah, it is possible, but it always comes down to capital, right? What is your capital that you have, and then from there, you can. The more capital that you have, the less you need to earn, right? If you have $300,000, you only need to make 1% a month to be able to cover your living expenses. Okay, so it's a lot about your capital, right? Tariq, yeah. Yeah, thank you, Tuan. Right, same time, it's on GoToWebinar instead. So, what you want to do is go to icmarkets.com. Let me send the link to you guys. Webinar tomorrow. Oh no, this is this is Bahasa, right? That's weird. Educational English session 5:30 tomorrow. Tomorrow. This should not be Bahasa. It should be English. Oh my God, they put it as Bahasa. Yes. This will be the session tomorrow. The Elliott Wave, the Elliott Wave thing here, right? It says Bahasa, but it's in English, so go register for it. I think I was put wrongly. I'll ping IC Markets to tell them to change it. A little bit confusing. All right. Cassandra will be teaching you about Elliott Wave, super intense. Don't miss it, right? Because if not, it'll be very hard to catch up with all that she's teaching. Okay. That's it for me, guys. Stay safe, trade safe, peace out. Thank you for staying. All right. I'll catch you guys again next week. All right. Bye bye.